Welcome back to U.S. Farm Report this weekend. Joe Jansen as well as Ben Brown on the show this weekend. It's kind of a battle of the universities. University of Missouri, University of Illinois, a lot to talk about. First, let's talk about Brazil. It appears the soybean bulls are kind of just standing on the sidelines right now, despite some fundamental news. I mean, this week we saw Brazilian firm AgroConsult lower its Brazil soybean crop estimate by 1.6 million metric tons, Joe, down to 152.2 million metric tons. Why was that not enough to kind of light a fire under these markets?
I think a lot of this is already priced in. We're seeing, a sort of dueling crop estimates. Some of those, frankly, are sort of to grab attention as much as to get an accurate estimate. We saw Conab lower their number a few weeks ago now, but in a pretty significant way. And I think it's sort of wait and see until something, some significant weather event occurs. Where this might have a bigger play is in the corn market, where we have to think about what the safrinha crop is going to look like. Planting progress is pretty quick on the basis of quicker soybean harvest progress, and that's sort of maybe where we might get some real news about Brazilian crops.
Yeah, but do we have a pulse of kind of that safrinha corn crop and where it sits right now?
Well, it's on pace. All the risk premium that we had earlier about concern about that crop seems to have kind of deteriorated away from this market. So the soybean comment and how it feeds into corn as well. One of the things that I think is interesting is even though we've seen these production estimates decrease, I think there's now a growing conversation about has acreage in Brazil actually increased faster than what we maybe anticipated, given these large amounts of supply that are coming into the cash market. If that is the case, that also holds true for corn as well, that we could see actually, or we might be experiencing higher safrinha corn acreage than what we maybe have thought the last couple of years.
Well, it has been some unusually mild weather across the Midwest lately. So a ton of field work going on, a lot of anhydrous being put on. But the Ag Economist Monthly Monitor, Joe, showed economists think farmers will plant 91.5 million acres of corn this year, 86.6 million acres of soybeans. And it was pretty much in line with what we saw out of the Ag Outlook Forum last week, which was 91 million acres of corn, 87.5 million acres of soybeans. I mean, right now, do you think that shifts much, or is that pretty much in line with expectations?
Personally, I think there's maybe a little bit of room to boost the soybean acreage number. My personal number is a little bit higher than that, kind of on the basis of what we saw coming out of, say, 2013-14, the last time we came out of a period of very high prices like we've experienced in the last 3 years. But ultimately, that's not a massive, market shifting number, whether it's a million acres in one direction or another. I think there's going to be just a significant supply if we get, on average or trend level yields in the U.S. this year.
Ben, is it possible that we repeat a situation like last year when we had that unusually mild and dry spring that we saw so many more corn acres go in than expected?
Yes. That's the answer. And I think that is the concern. Certainly, do we need 4 million more acres of corn in this current demand situation? No. Do we need that many more acres of soybeans in this current situation? No. And so I think that's the question. What do we do with, let's just say, 4 to 6 million acres of both crops combined that it doesn't appear the demand is needing at the moment?
Joe, speaking of demand, how do our export sales, how is that pacing right now?
I think sort of roughly in line with where USDA's current WASDE projections are at. We've seen kind of a slow pace for the past 2 months on soybean export demand, but a lot of that's really built into the estimates that USDA has already put out. If we were to sort of see kind of a rebound in demand for US soybeans coming out of China, sort of in this post-Lunar New Year holiday period, when we do kind of typically get maybe a little bit of a last gasp bump in soybean export demand, that could maybe move that number a little bit higher. But ultimately, with the situation in Brazil, where you've got really cheap soybean export bids at Brazilian ports, I think we're sort of in line with expectations at the moment.
Ben, if exports stay at this pace and we don't find additional demand, these kind of the prices that we're going to deal with, or could we trend even lower, do you think?
Well, that's the problem. We've got a lot of supply on the market. Ukraine and Russia are dumping large amounts of volume onto the market at really any given price that they can get just to help fund a variety of different things, including the war. Couple that with the still second largest corn and soybean crops out of Brazil and South America, record crops out of South America as a whole, and we end up in this picture where we're really struggling to find support on the low end. And then you tie it in with this acreage discussion that we were just talking about. We could be on a path, at least my expectations is we are on a path to have over 17 billion bushels worth of corn supply for our new crop year. And that's a very bearish picture to maintain.
Wow. Well, news this week, Mexico will continue to buy corn from the U.S. despite the ongoing issue with genetically modified corn. We'll talk about that, but we need to take a quick break first.